Hello everyone. Welcome to the PivotBoss Premium Trading Room and welcome to the monthly market outlook for July 2017. Today is July 5th, 2017. We usually do these on the first trading day of the month, but since Monday was a holiday abbreviated trading session, we decided it was best to go ahead and do it here Wednesday after the holiday, and here we are. So thank you so much for joining me today. You should be able to hear my voice. If you can, give me a yes or a Y. Just to let me know you can hear me before I begin. Awesome. Great to hear. Well, thank you so much for joining me today. Great. Awesome. Well, let's go ahead and get started. I'll be up front right now. I have been scanning the market here for the last hour and really having a difficult time finding great opportunities right now. We will be looking at some stocks that have been in the news a little bit. I have at least one opportunity to look out for in terms of an actionable opportunity, and then we'll take a look at some futures as well and talk outlook. But I wanted to start by recapping a few of the opportunities that we looked at last month when we conducted the monthly market outlook on June 1st. This is one of those opportunities right here. This is OHI. This was a fantastic opportunity. This was the first trading day of the month, so that was the day. That afternoon is when we did our monthly market outlook, and what was unique about this opportunity was that it was right on clear support. It had an overall bullish market, but we had a significant rejection here, a major rejection, and the idea was that rejection could lead price right back to our target zone. We had about 3250 to 33 as the target zone, and then we even had a little bit higher up in our trading room as well as this thing continued to reach targets. But this was one of those ones that we liked, and this was, again, a rejection signature. So for those of you that are not familiar with me, my name is Frank Ochoa, aka PivotBoss. The way that I like to analyze the market is by looking at pure price, looking at pure volume, and then identifying value and all the low volume nodes and those types of things. So really just looking at basic price movement, the auction, and breaking it down into price and volume, looking for the most important key levels in the market, and then looking for signs of rejection. The best approach for me is typically to analyze a chart and look for areas of support or resistance. Look for when price is attempting to break through support and then failing, because that failure, that failed range expansion, is one of the most powerful forms of technical analysis. And whenever you see a failure to probe a level, the reaction in the opposite direction is typically very strong, and you have high odds of reaching previous value. So in this case, you can see here, price was attempting to probe below support, failed, and ended up rallying into the close, closing well back above that support level. And what I usually teach is that now, once you have that significant rejection, there's an opportunity to find absorption, get a better entry, and then look to return this thing back to value. And again, we have ways and methods to identify where those key areas of support and resistance are. We have ways to identify high probability targets. And that's basically it. That's my approach. This was one of those opportunities here where we got a great area of support, a great rejection. The opportunity was to defend the midpoint of the day. So you can see right here, that little orange yellow dot, that one right there is the midpoint of the session. So you can see I have a dot in the middle of each of these bars. That's the exact midpoint. When you have a significant rejection like this, my first idea is to defend the midpoint and get the best entry opportunity at that zone. That entry usually helps you maximize your gain because you're not entering, say, at the open of the day, right? So after your signal, a lot of people are taught, okay, enter at the open of the next day. Instead, you're able to maximize that gain by entering at the midpoint of the day instead. You can see a big difference here. Additionally, if you enter at the open here and then you have to endure that pullback, now as soon as you get into a trade, you're already experiencing adverse excursion, and that is not my favorite thing to do. So instead, this goes back to my days a long time ago in Nirvana, where all of this was automated, where I saw a pattern over and over. We had automated strategies, automated systems. We'd get into a trade, we'd get in at the open of the next bar, and like clockwork, immediately we'd be down in the position before we made money. And I noticed that every time we got in, it would pull back to around the midpoint. And so instead of entering at the open of that bar, I shift my focus to the midpoint of the bar, made that one tweak, and it made all of the difference. All of the difference, because you're maximizing now the gain. You're picking up that much more move in that gain, and you're also eliminating that adverse excursion, or at least reducing it by a significant amount. And in this case, again, high probability targets using our ADR method. PivotBoss Advanced ADR, this indicator down here, helps to quantify average movement in the market and movement over whatever customizable period of time you like. So for example, this one's set to a 5-day range. So this is giving us average 5-day range. And then, of course, compression and expansion based off that range. So we're able to then use that to identify high probability targets. And this one was one of those opportunities that worked out great. Another one we had on the board was CZR. This one had already been breaking out. So June 1st last time was right here. And what I mentioned was in an uptrending market, stacked and sloped in the trigger zone, and it was starting to push through resistance with a stop run day. So the idea here was that price would rally into 12.75 to 13s, something like that. I think it was 12.95, something like that. And we got into a high just beyond 12, just beyond 13s. So we got that move 3 to 5 days later, hit the targets, and there it is. And it's a quick stick and move, right? These aren't opportunities that you want to hold forever. This is just, hey, this is an opportunity to get long at some point. However you want to do it, through options or through the actual stock, and then from there identify where the high probability target is. And so how did I identify that target zone? It's by using our ADR targets. So what I'll do here is show the targets for last month. So based off of this low on this day, that was June 1st, I said, I don't know if that's the low of the month, but if it is the low of the month, then we're shooting for this zone here. And that's our target zone, those two green lines. The first green line is 75% of average monthly range. The second green line is 100% of average monthly range. So basically, this second green line is an average move for this stock over the last 10 months. So over the last 10 months, this stock has averaged this much range per month. And that's all it is. And then once we come to the new date, now we have new targets for the new month. But anytime you see an opportunity that you like, I bring up this indicator, and from there you have a very good idea on where price could get to if that is indeed the low of the month. You can flip it. So here is, for example, the bear targets for the week. So this is the 75, and that's the 100% downside target if this were the high of the month. So again, you can use this for both sides, and that's how we were able to find the targets there. And it was just as easy as this thing is trending and it's starting to run these stops for all the bears that were defending here, and that led to a momentum move right into our target zone. So that was another great opportunity there. Let's see if I can remember here. I think STI was another one we had. Here's STI. This one was fantastic. Again, we were on LVN support. I love LVNs. That's a low volume node using the volume profile. And that tells you that there's rejection of those prices. Nobody really wants to trade 53s. That's why there's low volume there. And so every time price gets to that area, it's a rejection point, rejection point, rejection point. And so when price got there, this was June 1st, right there, that bar, right here. And I saw that it was on LVN support. We talked about it in the monthly market outlook. And the idea is if it can continue to hold 53s, we'd likely rally to this target zone right here. Again, that's the target zone. based off of average monthly range, and you can see price got right to that range. And by the end of the month, actually got to the very, very top. But again, I'm always talking about maximizing the move while also hitting high probability targets. So I'm not typically looking to push this thing all the way to the 100% target, because markets don't move in perfect averages all the time. Instead, my opportunity usually goes to the 75% target. That's what I call the primary target. This is your secondary. So one way to do that would be, for example, if you did buy into this opportunity, you can take off most of your trade by the time it gets off to the primary target, and then you can leave some on the table and try to maximize the move into the 100%. But for the most part, I'm shooting for this target zone. And again, this was one of those opportunities that leaned on significant support, bounced right into our zone, and that's the move. That's it. You know, whatever happens this way, it doesn't matter. This was the high probability opportunity. Get in, get out, take the money and run. Another one we had, let's see, I believe IFF. I think this was the only short opportunity that we looked at, or one of the few, because the market has been going up, up, up. At times you want to minimize sell opportunities. You know, when the market's going up, you want to focus mostly on longs, unless obviously there's some type of anti-correlation that you're working with. But in this case, this was the only sell I believe we worked with. This was June 1st right there. You can see again right into resistance, an LVN there right at 140. And the opportunity here was to look to defend that 140 back down the way, and I think this one still had more downside to go. Let me bring up the sell side targets here. So if I go to monthly and bring up all of them, here it is. So based off this high, because that wasn't the high on June 1st, it went just a little bit beyond, failed range expansion. You see this right here? Resistance, resistance. On June 1st, resistance. Price attempted to probe through that resistance 2 days later, pushed through it, failed, and closed back below that area. That was the rejection that was required in order to get this thing pulling back, and that's exactly how this thing played out. So we still had more downside, or had more downside. From that high, the primary target zone is here. In this area, you can see it got very, very close. Very, very close by the end of the month. And again, these are just monthly opportunities, but for the most part, you want to see these trades reach their targets within 3 to 5 days. I like 3 to 5 days is usually about right in terms of these opportunities. And then from there, if it's a successful trade, oftentimes you can look up 2, 3 weeks, 4 weeks later, and you can see that that move is still continuing oftentimes. So this one is still playing out. I mentioned to our trading room today that I still think that this has an opportunity to come down to the lower end of this range, given all of this energy that's building up here. Bears are defending off 138s. The expectation would be for a continuation of this opportunity, but there's no actionable great entry in this zone. That was more up here, but in terms of where this thing may be headed, I think it still has more downside. So those were a few of the opportunities that we were looking at in terms of stocks last month. It worked out pretty nicely. I did have a new one here. This is URI, United Rentals, and this one here has a rejection here. Again, I love failed range expansion. Look at this right here. Resistance, 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 Monday. And then today, price pushes through that resistance, rallies big time through it, but by the end of the day, closes back below it. And you can see the midpoint of the day is right where the stops came out, and price closed lower. That's a significant rejection day right there. In a market that's been downtrending. Additionally, that rejection also occurs off of prior market structure. What I mean by that is if you look to the left over here, you can see that price had been above the 117s, 118s, and built market structure up here, price distribution, and then gapped down and made it resistance. So basically, this rejection is coming off of prior support, Those are all very good qualities. Now again, with the market going up, you have to be careful going short these opportunities, so you have to do it in a risk-averse manner. Oftentimes, what I'm looking for is to scale out of an entry. Once this thing gets in, scale out after your entry once price goes in your favor by a desired amount, whatever amount you set. Typically, my T1 is equidistant to my fixed loss. So say, for example, you're using a 1 point stop loss. Then when price goes in your favor 1 point, take half off the trade. And right there, you can keep your original 1 point stop loss. And if that is hit, you have a break-even trade. You lose exactly $0 less commissions. That's a much better way to work a break-even trade than simply moving your stop to the entry. That usually gets hit more times than not. So instead, you can keep your original stop, you sell half the trade, now you've mitigated risk, and now no matter what happens, you're good, you're covered, right? Obviously anything can happen in the market, but that's a much better way to mitigate your risk. In this case right here, what you see is rejection off of these highs. And then right here, this is something that I like to look for as well. You see that white dotted line right there? That white dotted line is the previous month's close price. The previous month's close. This solid white line right here is the previous month's high price. And so right now, bulls are defending the previous month's close. That means that when price hits that level, bulls are defending, they're buying it. And that also tells you that there are sell stops that are now building below. Imagine, you got to put yourself in the position of those bulls. What if a bull, if you bought right here, and all of a sudden price rallies big time, and you're euphoric, you're happy, and then by the end of the day there's a major sell-off, and then price comes back toward your entry. Now you're a little nervous, you're a little scared here, and some of those bulls start to jump ship, some will hold their stops, and at some point, if price starts to break through the previous close, back below that level, you'll start to see a momentum move as those downside stops get triggered, and you start to see this thing float lower. So for the most part, this is a fantastic opportunity here, but you have to be quite careful. We have to see how this thing opens up the next day. That's always very important, because this trade basically is over if price pushes back above 115.16 and closes above that level. You typically don't want price to get back beyond the midpoint of this rejection day, right? So you don't have to hold your stop way above that high. If price is going to start pushing back through the midpoint, usually 9 times out of 10 it takes that high out. So overall, the idea and the opportunity is to look to defend a retest of 115.16 or 115.25, whatever that zone might be. And if bears can keep that offered, the opportunity then becomes to run the stops through recent 2-day lows, and that could trigger this thing downward. Now, based off of average monthly range, if this remains the high for July, your average move based off of the last 10 months takes you down to 101.46. And that's also coincides with recent support. That's an average move. Again, we don't play to perfect averages as a primary target. Instead, you'd be looking to push this thing down to 105.48 based off of this high. 105.48 is a great, great target. Additionally, one thing I look for is when a market closes really close to the high up there. If the high is rejected, if the close is rejected, and you do start to move lower, the tendency is to at least come back to the midpoint of the previous month's range. That's the midpoint, this being the pivot range, with the shot at returning all the way to the previous low. So that's something right there where this could continue to play out throughout the month back toward 100. So we could be looking at much, much more weakness ahead out of this one. But again, it all comes down to how price responds to 115s tomorrow. So when price comes into this area, are bears going to defend? If so, we could be looking at much more weakness. If price starts to push through these lows here, you may see a big stop run day where the sell stops come out. The midpoint is somewhere at or near where the stops come out. And then from there, you could be looking to defend pullbacks, etc. as this thing goes downward. So this is an opportunity here to watch out for in the days and weeks ahead. Now I wanted to look at some of these futures now, and again, usually what I like to do is look at some of these stocks, look at some of the markets, provide a bit of an outlook. But if you have anything that you want me to check out, by all means, please post it in the chat, and I'll get to it as long as we have time. So right now, I'm going to take a look here at the ES. Here's the ES, and the ES right now has been obviously quite bullish overall, but we are now in a phase here where we're kind of stuck. We're kind of stuck at these highs. Every time price is pushed to a new high, it's been rejected. Then price gets to a new high, it's rejected. Now the market's not even making new highs anymore. Instead, it's kind of lower lows and lower highs. And so we have kind of a rounded top here. Kind of a rounded top. You have major support that comes into 2400. This is a level that we mentioned last time. I mentioned that 2400 to 2404 half was a big time buy zone. So if price were to reach it, it could be a great buying opportunity for a push higher. And that buying opportunity came last Thursday when price dropped significantly into those lows, and by the end of the day had already rallied nicely. We got as high as 36s off that area, and now we're holding with an inside day today. So this is a major area right here. And if you look at this previous price distribution here, this market structure, price pushed through the top there, made its support, and continued. And then it comes back and holds it again. So that's clearly an area where bulls are defending. The problem is they're not getting paid. Bulls are not getting paid. Again, put yourself in their shoes. If they're buying here, ideally you'd like to push this thing to a new high and get paid. And you'd like to do it quickly. Instead, that's not really happening. So there are sell stops that are now building below those zones, and those could be triggered. And if price were to push and break through 2400, the next quick stop down takes you to about 2345, with a shot to rotate all the way into this LVN. First things first, if you were to break, this is your target to shoot for, right? And that's just the target to shoot for. I think the better opportunity to buy would be down here. Again, I don't know if we see that much weakness because this market has been extremely buoyant. Every time price pulls back, it's been a 1 or 2 day pullback, and then all of a sudden this thing is off to the races again. So even if we were to sell off, I think it would be another opportunity to buy. Now right now, one thing I think that is apparent is we have kind of an expanding range that's developing up here. Every time there's a new low, there's a tendency to snap back to value. There's a new high, it's a tendency to snap back. So it could be a fade the edges type of approach. But one thing's for sure here, as we head deeper and deeper into the summer months, you tend to see kind of the summer doldrums. You tend to see range-bound markets, and that's something you're seeing a lot of in tech. So if you look at any tech issue right now, you've seen a lot of this year. Straight up, straight up, straight up, straight up, and then now you're seeing this, right? And that could likely persist here for the next 4, 6, or even 8 weeks before we see expansion. But that's not a bad thing. There's many strategies to take advantage of that type of market. Additionally, those are energy building stages, right? Energy building, and that means that you could see expansion at some point down the road. So it's not a bad thing. So with the ES, nothing actionable right now, unfortunately. But we do have some key levels to watch. That's 2400. If price were to get down here, this previous low, that's going to be an opportunity to watch to see how it behaves. Because if there's any failure to hold below 2400, look to swing it back up to this high. But that's about it, right? Right now, everything's being faded. If there's a failure to hold 2400, then you're targeting that 2345. If price were to push all the way into 2300 to 2310, that remains a great buying opportunity, and you'd be focusing on 2365 on the bounce, followed by a move perhaps back toward 2400. So those are a few opportunities to watch out for in the ES as we continue throughout the rest of the summer. But overall, this thing has been extremely buoyant. Every time it pulls back, it's been a significant buying opportunity. As we know, markets don't go straight up. They don't go up forever, but right now this thing has been trending higher, and every time it pulls back, it's still a buying opportunity until proven otherwise. Here's a look at CL. CL has been fantastic. This one has been just incredible, especially for us in the room. What we've been looking for here, obviously, we talked about this one last month and the rejection day. This is the type of day that I'm talking about when I say I'd like to be patient until you see major rejection. Once you see rejection, then you have to look to enter that market based on the techniques that you're comfortable with. Mostly I'm looking to defend midpoints and look for absorption. On this particular one here, after day 2, we were looking for a failure to hold below that low. So this failed new low was an opportunity to get long and price rally to our zone. In our last market outlook, I believe it was this day. On this day, or perhaps this day, that was 6-1 right there. The outlook was that we would likely get back toward value, followed by the potential to get even lower into 45s. And that happened and then some. But what was fantastic about this opportunity was the pullbacks. Let's go here and let's go here. Was the pullbacks to the pivot range in the downtrending market. For those of you that are familiar with my book, Secrets of a Pivot Boss, this is straight out of the book. Straight out of the book, which means when price is trending downward, and focus right now on these 3 pink pivots. Focus on those 3 pink pivots right there. The idea is in a downtrending market, these are like stairs in a downtrending market. And every time price bounces into them, it's an opportunity to sell to new lows. Then the next week, price bounces into it, and it's an opportunity to sell to new lows. And price bounces into it, it's an opportunity to sell to new lows. That's the trade. So if you want, a 2 or 3 day swing trade opportunity intra-week where you don't have to hold over the weekend, which is my ideal opportunities, that is about as easy as it gets. So every week, every Monday, we'd come in there and I'd mention, hey, right now we just had a failure to hold above 2 day highs. This is an opportunity to sell it to new lows. Oh, look, we had a failure to hold above 2 day highs. This is an opportunity to sell it to new lows, right? That was it. Failed range expansion. So these are 2 day highs. Price pushes above those highs and fails. Failed at 45.20 and then dropped and closed near the lows. That is failed range expansion. Again, failed range expansion, the most powerful form of technical analysis there. It takes you places. It's the fuel, right? Because again, think of the market psychology. Think about those participants, those bulls that bought above 45. You buy above 45 and all of a sudden, boom, this thing is going against you hard. You start getting your stops run, you start jumping out of the trade, and all of a sudden, everybody's jumping out at the same time. So you want to be part of the crew that's trapping, right? So this was perfect. This played out great. And so last time, I believe that was June 1st, we were looking for this thing to come back to value, followed by a push down toward 45s. We got that and then some. So that was fantastic. Now, with regards to current activity, I'm going to go back to this template here and take it off. What I mentioned here recently, for those of you that follow my pre-market reports, I tweet them out every morning, absolutely free to everybody. What I mentioned before was we're going to keep selling this thing until we get below this low. Once we get below that low, it's an opportunity to look for a trap. This is where you find bear traps. You find them below support. You get any of those late sellers, because look, this thing's been selling off forever, ever. Again, put yourself in the place of those trapped participants. You get sellers that are here that get in too late, sellers that get in at the lows, and now price isn't going lower. That's when this thing has an opportunity to see a big bounce back. And so we were looking to sell this thing until we got below these lows. And even on this day, which was a Monday, the opportunity was to trap above 2 day highs and look to bring it to new lows again, just in case. And that was a day trade that worked out, where price pushed above those highs and then dropped to this low. And then in the trading room, we saw this low get rejected significantly, and then it could not push to a new low. And at that point, that's when we said, okay, I think this thing is done going down. Because now it's the until proven otherwise thing that comes up. I always say, you keep doing the same thing until proven otherwise. At first we were selling, we're selling, we're selling, we're selling, we're selling, and then it proves otherwise. Now you look to go the other way. And so this was the day where it happened. Price pushes back above this high here, struggled with it for a little while, and then this thing just kind of took off. So it was a nice push higher. Now, I'll be honest, I wasn't banging the table about buying this one on the way up. I'm still not super impressed with the move yet, because there was no real rejection down here. It was minor rejection. It wasn't like this, right? When this happened here and we had that major rejection, that's when I was pounding the table saying this is a major opportunity to buy it back toward 50. Big, 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 right? Over here, I was much more cautious about it. I said this thing is going up, but there was not significant rejection, so be cautious. But one thing we were looking for here is how is price going to respond when it pulls back toward 44? Because the idea is if these late participants got in below this low and now they're out, well, when price comes back to that support, it's an opportunity to buy and push it back toward highs. And so right now you can see major sell-off occurred today. We had a nice bounce late in the session here, left behind a tail, but closed below the midpoint of the day. Still not great, but we're still above 43.76 and above 44 in general. I would say watch to see how price behaves there upon a retest, because if price does push back and hold that level, there could be a retest of the recent high, followed by a continuation into 48.76 and 49s. So that's the opportunity right there for crude oil for the month. But overall, this is the larger range right now. So I wanted to talk a little longer term here for crude. I mean, if you look at this, this is a 5-year view right here. That's a 5-year view. And over the last 2.5 years or so, we've been kind of stuck in this range. And then over the last year or so, we've been stuck in this range, right? And so you can see this volume profile here off to the right. And volume profile gets bulky here and goes down. Beautiful D-shaped profile, normal distribution. Up here, rejection with a low volume node. That 55 is a CLVN. Down here, there's a 40. That's a CLVN. Right here, 45.66, that is composite VPOC. And right now, we're chopping around composite VPOC. And what I mentioned to our traders time and time again is when you're trading around composite VPOC, you have to be careful because there's no real edge at value at times, unless certain things happen. There's no real edge. The market trades around value because it wants to stay around value. That's where everyone's comfortable trading it, right? That's where the HVN is. That's where everybody wants it. So you have to be more patient right now with crude. I think don't want to get caught in any chop around VPOC, but you can see the clear trading range here and the edges that it presents. The edge up here is 55, the edge down here is 40. So if price were to drop lower into 40, this provides the best buying opportunity upon what happens at 40. Is there going to be a rejection there? Is price going to try lower and then drop? What is it going to look like? So I would be patient if you don't have to trade crude right now unless something shakes out a little better. This right here, should price drop into 40, could be a fantastic buy for a return back to 45.66, followed by perhaps a move into 48.76. So right now, you can even see this thing kind of, if I were to put this in a weekly chart, there's a rounded top that's kind of building here. Where every time price got to a new high, it was getting rejected, new high rejected, new high rejected. Now it can't even make new highs, instead lower highs. And now that could really unleash itself for a significant decline ahead. That would take you down back toward recent lows, right? I know a lot of folks don't think we can get down there, but just when everyone thinks you can't do something is about when the market does it. So I'm going to keep my ideas open for this one. I think the short-term opportunity is watching for defense of 43.76 for a shot at bringing this thing back toward 49s. If that level doesn't hold, I think it's a clear path toward 40, and from there that LVN could provide the bounce back toward 45.66. So those are a couple of opportunities to watch out for here in crude. But overall, this range is significant. Significant range, lots of energy being built up in there, and at some point you're going to see range expansion. It's just right now not really doing anything other than staying in the range. Wanted to look at the NQ. Tech has been super bullish. Here's the 2.5 year trading range that it built out. That range there broke into the upside, held above the top, a couple of rejections just below it, and then boom, just released that energy to the upside. Just a huge rally. I can't remember a time in recent memory that we've started the year this strong. I mean, just burning it to the upside until we topped out at 59.07 half. That occurred early in June. And this is what I mentioned earlier. If you look at a lot of the major tech issues, this is kind of the chart you'll see. Big up, and then right now you've got yourself a range that's developing, and this range is likely to hold throughout much of the rest of the summer, in my opinion. That opinion is can change as the market changes, but overall, my primary idea is that we've set the impulse move. The impulse move, again, if you're not familiar with my work, I look for impulse moves in the market where the market will drive hard in one direction, find a high or low, turn around and immediately drive higher until it finds that next pivot high or low, and then it snaps back to the midpoint of that range. And that is a market-generated event that is designed to set the edges for a market and then allow traders to do business. So after all of this uptrending price behavior, that markup phase, this is now your distribution phase. This is the phase here where now market participants can do business. And the best way to engage this type of market is to be patient and wait for the edges. Be patient and wait for the edges. So any probe here, anywhere in here, is an opportunity to fade it back to 57.29, perhaps as high as 58.20. Any probe up here into 59.07 or anywhere above 58.50 with rejection could be an opportunity to bring it back down against the range. So fade the edges until proven otherwise. Fade the edges, and ideally you're looking for rejections at those edges. So 55.50 half is the edge. We got very close today and then rallied back toward the previous month's close. So not quite into the LVN, but if we were to get down into 55s in this LVN here, you see the CLVN that I marked, that would provide an opportunity for bulls to come in and defend and squeeze this thing. But for the most part, the opportunity here is likely fading the edges for the next 6 to 8 weeks, right? This could take us into Labor Day, where we're just doing this until Labor Day. And then eventually we see the next move. If I had to use my crystal ball, perhaps you do this until Labor Day and even into the end of September. Then in October you do something like this, and then boom, you gun it into the holidays, right? That could be something that's huge. And again, if we were to break down like that and have some sort of October scare, 51.93 half would be the target. It's the next LVN below 5,500, and it's also the 100% expansion of the impulse range. So that's how we're able to find highly predictable targets. We use this range to help us identify that this is the target zone. And you'll be surprised how often that target is reached. So that's kind of the look right now. Again, nothing actionable at this moment, but we're in an area where things could get very interesting and quite profitable for bulls if you see rejection here. I'm not the one to just blindly put a limit order here at 5,500. I've done that quite a few times and felt like a genius many times and also felt like a fool many times. Instead, I like to wait for rejection. Let the market do its thing. Let the market test that level. Let the market reject. Let the market do whatever it's going to do, and then there's an opportunity to get that high odds entry and work your way toward a high probability target. And so I'm the one that's going to say, hey, just let this thing go and see what happens. And if it rejects, then we can negotiate an entry and bring this thing back to value. So this one here looks like it could be more fading the edges until proven otherwise as well. Piggybacking off of crude oil, RBOB gas futures here, we had a similar analysis. I didn't provide it, I don't believe, in the June outlook, but in our trading room, this is something we talked about. I may have also did a pre-market report mention of this as well. Basically, based off of this pivot low, whenever price got back below it and then kind of came back above it, the idea was there's a trap waiting here to bring it back to value. And this one did see a rejection of this low here, a lower low failure. And off that lower low failure, you saw a bounce right back to value. I mean, right back to it. Those are the opportunities you want to watch for, are those rejections. And once you have a rejection, you're looking to bring this thing back to value. Gold was fantastic based off of our analysis last month. Last month, we had a nice little bounce here, boom, and then we were sitting about right here somewhere. Actually, we were sitting just above 1260, and we were in this little range right there. And I mentioned 1260 is the level to lean on. If bulls can keep 1260 bid, look for price to push above this high into 1295 to 1300. Price got to 1298s, right into our target zone. It's not that I'm a genius. It's just that the market looks at certain prices. And if you know which prices, you know exactly where the market's heading sometimes. Not only did we mention 1260 can hold and it goes to this target, but we also mentioned that this is an area to look to sell. Look for rejection up here, because then you can bring it back to 1259, 1260, followed by the potential to see 1229s. So that's from the previous market outlook for June. And you can see price came right into it. This is that previous high. There's a rejection, and it was off to the races. Got back to 1260 a few days later. Major rejection here again, and that helped continue this thing down to the 1229s. Now, in our trading room here, we were very interested in this range and the way it was developing. And I was actually looking for a potential squeeze once price got to this range. Once it got to 1240, it was trying to go down, really wasn't going down. So I mentioned to our traders that if this thing starts to push back above 1260, there could be a big stop run day. But that did not happen, and instead got that next wave down. But this breakdown occurred on the holiday shortened Monday, so not something that I was a part of. Definitely, I was out enjoying myself. But we're now into 1220 and showing some strength. So where do we go from here? Well, we have quite a trading range on our hands that's developing, and this trading range is forming around value. Again, I am a very big proponent of using value in your charts. Value areas, this is the value area right here, right? Value high, value low, and this is value. And whenever the market gets too far outside of value, you tend to see rejection and a return to value. And so right now, after this significant rejection we had down here below 1140s, price came back precisely to value, and now it's chopped above it, chopped below it, chopped above it, chopped below it. And now it's trading around value. That's what the market wants to do. So, I don't know where this low is going to come in just yet. I don't have to know. I just have to let the market do its thing. And there could be more downside. This is, 1220 has been a key pivot, but so has 1200. So we may have to come back to 1200 before we see some sort of rejection opportunity back to value. So right now, I would say in gold, you want to be prepared for a rejection somewhere down here. So I would say 1200 may be the level to watch for rejection. Maybe there's one big spill move down. Maybe we get a rejection signature, and at that point, look for absorption and a return to value. 1259 again is the high odds target, followed by a push again to 1290 to 1300. any movement at 1300 right now is being smacked down so hard. Ever since this thing went offered here, the election was here in the US, boom. Now this level here, this level here. So 1300, if you see that level, odds favor another rejection. So if there is some sort of rejection here and you participate, you got to be sure that you're taking this thing off the board by the time it gets up here, or there could be a quick reversal of that trade. So that's an opportunity to either take the last off the table or begin looking for rejection up at those highs. So right now I think there could be a little bit more downside toward 1200. And anytime you're getting below recent lows like this one or this one, right, there's an opportunity for rejection. So we're not quite there yet. Could be more downside here short term, but at some point we could see a nice reversal back toward value. So something to watch for here down the road. ZB is another one here that we've been watching, and I haven't really talked a whole lot about it. I've mentioned to our room that this one hasn't really had the juice that it had before. You know, all through here it was fantastic, and through here it was fantastic, but here recently it's just very quiet, not really moving. It has those days where it takes you from A to B and then it just goes sideways. For example, you know, here it's just doing nothing, and then one big day takes you up here, then it does nothing, then one big day takes you here, then it does nothing, then one big day takes you there, and it does nothing, then one big day takes you down, and this was the one that got some juice. But what we were looking for was 155s, 155 01s, 155 16s, that zone. We were looking for signs of rejection of those prices for a return back toward value. It just took a lot longer than we expected. You know, tend to see 3 or 4 days or something like that. It's followed by a rejection back down. This one needed a little bit more, and then on this day it ran stops of several days before it. Here's the midpoint of that session where the stops came out, and then that triggered the push downward. So right now this one is still poised for more downside, perhaps into this 150.11 target. That's also right near support. So you can see this major support level right here. This is also where price went offered through it. So that's been support. That's the next target level down. A way to play that, and this could be much more actionable than some of these other opportunities right now. You have 2-day highs right here, and those 2-day highs are occurring right at the previous month's close price. Bears are defending there. Remember my idea about failed new highs. If price pushes up above those highs tomorrow, and by the, starts to see rejection, by the end of the day it closes below there, that could be a selling opportunity for new lows. So any bounce, perhaps into this pivot range for the month, right? If this thing bounces up here and starts to show weakness, that's an opportunity to sell it and bring it down back toward 150. Now 150.11 might take a couple of weeks to get there, but we can quantify that. And we quantify it using my ADR targets tool. So if I bring this up on a monthly basis, and again, we don't know what the high is yet because we haven't set it yet. I don't believe that this is the high just yet. We might set the high sometime tomorrow or by the end of the week. If that's the high, right, then we can adjust it. But for right now, this is the high. And from that high, you forecast your 75% target and your 100% target. So based on average monthly range over the last 10 months, your target would be 147.23. What that does is it quantifies how likely it is for price to get to, or how probable price is to get to that CVPOC, because CVPOC is above both of those targets. And if these are high odds targets and this is in front of it, then this makes it a much more probable target to reach than not. So again, I would say watch for some sort of rejection up here. If this thing gets above those 2-day highs, watch it in this zone, because if there's rejection, this could be the next target right here, 150.11. Alright, if anyone has any other symbols for me that you'd like me to look at, now would be the time to add it in there. If not, I think that pretty much does it for our outlook right here. Again, not a whole lot of opportunities that I saw. and that's usually par for the course as you head into summertime trading. You got to be much more selective about your opportunities and take what comes your way, but right now is not typically the time to force them. So I'll be a little bit more cautious with some of the opportunities I'm providing, but URI is one to watch. ZB, again, one to watch. This URI, again, rejection off those highs of 116 offers an opportunity to drop this thing back between 101 and 105. Again, it's going to be very important to see how the market treats 115s tomorrow. If price can't get above 115, 115.20s, it could be a good opportunity to bring this thing back down. Yeah, let's take a look at Apple. Here's a look at Apple right now. We've been following Apple for some time. We've rallied here into the 155s. This has been very, very bullish. That was a huge gap up on earnings there. Never came back to fill it. Market structure has been, a bullish markup phase. But right here, things kind of changed a little bit at 150. Price tried to hold above 150. There was a pullback and a buy, but no new high. Instead, you got a flush of the stops and price dropped back down. Now we have market structure down below it. That's not very healthy or bullish, at least not what you tend to want to look for if you're trying to buy this thing. So right now, 150 is the key pivot here to watch. If price were to go into 150 and reject, that would be an opportunity perhaps to sell it into 137s. Again, this is Apple, and if you want to start selling tech, you have to do it in a responsible fashion. You have to know your risk reward, you have to know your risk profile, you got to be able to scale, you got to be able to do all the things to mitigate your risk. So you got to be careful about selling tech right now, but 150 is the level to watch there. If this thing comes into that area and can't get beyond it or is rejected at 150, the target's going to be about 138, right into the LVN. Overall, after a move up like this, you can see kind of a range starting to build out, a larger range. This is the mid. So it could also be a great fade the edges. So again, if we were to push down here, it could be a great fade back up. If we were to get up here, it could be a short-term fade back down. So right now, again, nothing super actionable in Apple, but 150 I think is a very good pivot to watch. I wish we had a great impulse range to work with right now, but we really don't. We have an impulse high and an impulse low, but we never really came back to the mid. So we got very close to it. So we don't really have a great range to work with. Otherwise, I'd have it marked. Yeah, here's GILD. GILD we had as a sell last time down here, and I mentioned I usually don't provide opportunities like this one because it's been so beaten down. But it worked out a little bit, rejected, came back up, tried again, and rejected. And after that, major stops came out. You saw a huge push up, and this thing has broken a major trending move down. And that's quite bullish. If you look at the monthly pivot range as well, let's open up to the rest of the pivots here. Again, I always focus on that monthly pivot range or the weekly, depending upon what you want to look at. Look at the stair-step nature, right? This thing has been stair-stepping down for month after month after month, and then look what happens this past month. No more step down, instead you have a step up. That is what I call a change of bias, a change of bias. And from that change of bias, you usually see a significant rally. Again, this comes straight out of my book, Secrets of a Pivot Boss. It comes from the training at Masters and those types of things, where now, after this major squeeze, and you have a higher value relationship, the next pullback into this zone could provide a fantastic buying opportunity to come up here and hit an HVN, perhaps at 74s. Perhaps you feel the gap here at 73s, right? So I think this has a good shot, just based purely off value here and how it's played out and this change of bias, to push higher. But it all depends on how the next pullback is treated. This one right here you can see had stacked and sloped PIMAs to the downside, and now they've all started to shift up. You're starting to see them alligator mouth open here. So the next major pullback is going to be very important. If this thing gets back to about 68s rather, if it gets back to 68s, that might be an opportunity to watch for rejection and push this thing back up. So again, not actionable right now, but this thing has broken significant trending behavior to the upside, and that could lead it higher. Now, if it does rally, there's a significant volume ledge right here. So if this thing gets into 74s or 75s, that might be the end of the road for this one. So 68, perhaps up to 75 might be the max of that move right now. But again, not actionable at the moment. Let's see what it looks like on the pullback. XLF. Thank you for the ideas, y'all. Here's XLF. We've been following this one as well in our room. So with this one, obviously we had a nice little trend up move. What I had been watching before was this 24 level. And we had a sell on it on this day right there for an opportunity to get it back to 23s, and that was the move. That I mentioned if it gets to 23s, it's an opportunity to bring it back up because that's the distribution, right? Well, the transition occurred here. That was a transition day where it transitions from this distribution into the next. There's a transition move. This is the retest move to seal that level as support and push it to the next highs up here. So this thing has done everything it's supposed to do by way of market structure and price distributions, exactly as it should play out. But now you're coming into 25s up here where you had a significant rejection. You're above the previous month's high right here. I would be cautious up here because once you get into this zone, there's a tendency to come back toward 24s yet again and start trading in this distribution. So we're at a decision point very soon. This is previous highs. It's either got to decide, are we going to drive and continue higher? Or is there going to be a rejection and a return? And I would be watching to see how price behaves above 25s here, above that previous month's high. Because if there's any rejection up here, the quick idea is, again, to bring this thing back toward 24s. Here's a look at Tesla. My pleasure. Now, Tesla had a fantastic rally based off our 290 to 390 idea, here to here. Recently, price pulled back into the trigger zone here, was holding. I mentioned in our room that 350 would be a great opportunity, the better opportunity to look to defend. I think last month, June 1st, I mentioned 330 would be an opportunity to look to defend. And you can see how this thing has just eaten through those levels right now. Just not respecting 350 and never got a chance to trade it. Just gapped through it. 330, dropped through that and closed below it. I mentioned also last time that this thing could get all the way back to 290 and still be considered a buy. I would be cautious on Tesla right now. It's such a story stock, especially with some of the things they're talking about with regards to their how fast they'll ramp up production of their vehicles and all that. So sometimes it's buy the rumor, sell the news type of thing, right? And they were talking about how they could be producing 500,000 cars here in the next year, and that's kind of sell the news type of thing. So at some point here, what I do like about this recent move, at some point, we're going to find a rejection low, and from that high to this, wherever the low may be, you're going to get a great impulse move. So the impulse sell-off is happening now. At some point, you're going to find some sort of rejection, and that's going to offer a fantastic short-term buying opportunity back to the midpoint of that impulse move. Does that happen somewhere now? Does it happen a little lower? At this point, the way that it's just melting through LVNs leads me to believe that it's at least going to come back to this HVN here, which is 310. So I think this one has a little bit more downside, and from there, we could be looking at a rejection opportunity and a fade back toward the mid. So right now, this one, quite a bit of a pullback here. But as we know, this has been quite a bullish issue here. Every time it pulls back, it's still been a fantastic buying opportunity. Even back here, sold off at 290s all the way back down to 240s, and that still provided an opportunity to boost this thing. This one sold off from 320 back to 290, still provided a bounce. This one's quite a big move, but if we find rejection at some point, again, it could still be a bounce opportunity. Here's XLE. We're talking about this one today in terms of its trending structure. This one's been trending downward. Look at the great lower highs in this move, lower lows in this move. It's got a great channel. The intraday chart had a fantastic setup that we follow in our room, named after one of our traders in the room. And, you know, it's been nice. I think this 64 level is significant, though. We're right on a CLVN. We're also below, or had been below, VAL on the composite profile. So that's important. That's an important level. And right now we've pulled back and sold off a little bit. 64s is the level to watch. If XLE can't probe through 64s here, there could be a return to value. That's 68.48. And we have not tested value since May. It's been trading below it in a downward trending structure. And if this thing can't push to new lows below 64s, that means there's a rejection of those prices. And when you see rejection, it's an opportunity to bounce it back toward value, 68.48. So right now, I'd be looking at 64s as an opportunity to watch for rejection. And if that's the case, it could be right back up. Below 64, opens up 59. That's the next LVM below. And if it can't hold 64, then we might see much more selling into 59s. So right now, the primary opportunity is 64 back to 68.50. Failure to hold 64s gives you 59s. Thank you all for those recommendations. Some good opportunities here to watch out for as we head into the rest of July. If you're not familiar with PivotBoss and what we do here, I'd like to show a quick offer that we have for you all. If you want to hang out in the trading room, here's a great way to do it. Or if you want some fantastic training, again, you can go to pivotbossmasters.com/freedom. That's where we have our 4th of July special here that ends at the end of the week. Reload that. This 4th of July special gives you our PivotBoss Masters training for $9.95. Fantastic price for just incredible training. I get some of the best feedback from the folks who have taken this training, and not just any, you know, random person off the street, some fantastic traders. And when great traders are telling you you have great training, I mean, it really means something. That tells you that just anybody off the street can come in and learn some fantastic techniques that'll take you your knowledge from 0 to 100 very, very quickly, right? I mean, it's incredible to get just great feedback like this or this from folks that really, really know the market and have been around it, quite frankly, much longer than I have. It's just incredible. And for $9.95, you're going to get fantastic training. We got core training videos, proprietary training videos, powerful tools for various platforms, including Thinkorswim, InvestorRT, NinjaTrader, and OmniTrader. There is always a 100% money-back guarantee, so if you're not happy, you get your money back, no questions asked. Additionally, what's great about this training is that every time we host live sessions, live training sessions, or offer additional training, it's yours at no additional cost. You pay once, and you have access to everything forever. And if you join and become a part of PivotBoss Masters for $9.95, you'll also get 3 months of our premium trading room. That's $99 a month is our room, so it's a $297 value, and that'll take you into September if you jump in right now. And so you'd have access to the trading room, you'd have access to our training, and you'd be able to see us implement these concepts and these techniques live in the market every single day as the market allows. And so again, it's a great way to really immerse yourself in this. I really wish I had training like this when I first started. And again, a lot of us that have been around for a while, I started trading in 1998 when I was still in college after my freshman year. And a lot of times we have to build it through lots of scars, lots of battles, and from there, it's only the persistent survive. But to get a head start with training like this is incredible. And if you have a couple of moments, I can actually show you the training if you like. If you go to, well, you can't go there, but I can. Let's see. Let's log in there. And let's pull up our master's dashboard here. And so from here, this is our master's dashboard. And for those of you that take the training, you have access to our dashboard. It's really well laid out. Our core training is here with our theory, analysis, and execution. Proprietary training teaches our PivotBoss pivots, PivotBoss bands, PivotBoss ADR method, and PivotBoss PIMA method, and allows you to use those indicators that you get included with the training. We have a fantastic chart gallery, bonus training as well. And our resource library, again, currently supports these 4 platforms. And for example, if you come down here, you'll see theory, analysis, execution. So if you click on something like execution, for example, you're going to get trade and risk management. So you can see here, these are the titles. Risk management, introduction to core trade management, basic professional trade management, introduction to order flow analysis, introduction to the footprint, core trade management techniques, entry techniques, advanced trade management, pinpointing precision entries, confirming entries with the footprint, studying entry scenarios with playback. Those are the execution content. If you go to something like analysis, for example, this is all the ways that we analyze the market. We start with algo and program analysis, which sets the tone for everything else you learn. From there, it's price-based analysis, which includes professional price levels, the price-based analysis, volume-based analysis, advanced volume profiling, volume profile basics, introduction to volume profiling, beginner volume profiling, pivot-based analysis, and intraday analysis that teaches concepts and techniques that use things like VWAP and those types of things. So a lot of great analysis there as well. If you go to something like theory, this lays the groundwork for everything we do. Auction market theory, that's what we use to build our ideas and to trade based off markets movements. We're using auction market theory to identify market participants and those types of things. Core principles like foundational market concepts, these are just concepts that work. They've worked since the market began, they continue to work to this day, and those are concepts you can trust and rely on. We also talk about mindset, becoming an elite trader, auction market theory, and various forms. So lots of great training there as well. If you go to prop training here, you can go to any one of these. For example, if you go to PivotBoss ADR, you're going to get our proprietary training courses here, in addition to scans and lots of different things. Just a fantastic way to really get a head start. If you go to chart gallery, this is awesome right here because it is kind of a chart gallery that you can custom create your own slideshow. So if you want to learn more about auction market theory or change of bias or volume profiling or previous high-low close or whatever the case is, you can click these. Here's auction market theory. When you click it, it creates a custom slideshow. You click on slideshow here, and then you can start clicking right through. And again, if you click on the actual chart, it'll bring up a bigger version, and then you can click through and get a lot more information for any of those topics. You click here, and it brings you back to the tag cloud, and now you can re-choose. So our members love this as well. If you go to the resource library, lots of great resources here. Thinkorswim, for example, which I was just showing, gives you a lot of great scans. And I mean, just look at the amount of scans that our traders like to use. You don't have to use them all, but I teach them all, and we use certain ones in certain environments. So a lot of great things here as well. But just a fantastic resource here for traders. And again, I wish I had this when I was starting. So again, we have a fantastic offer for you. Again, pivotbossmasters.com/freedom. You can come down here, read more about it, and gain instant access to this training. If you're already well versed and don't need the training, you can go to PivotBoss Master or just PivotBoss.com, and from there you can be a part of our trading room. So here is PivotBoss.com. Here's all your various headers here. So if you go to book, it's $69, 314 pages. A book that just surpassed my expectations. I worked super hard, 18 months, to put together something that I could be proud of and that I could be sure could help traders. And the feedback I've gotten from traders from around the world is incredible. I mean, just incredible feedback that I always prayed that folks would give me. And I really do believe in this book. And again, if you love trading, if you love reading, if you want to get ahead, this is the way I always learn. I have so many books at my side just now that I constantly read through. Basically finished a book over the last 2 days, just before today, just to get kind of a head start on the week. So fantastic way to jump into some of the content that we use. Additionally, here's our trading room. You can learn more about it. If you click right here, if you click on that right there, it'll take you to, I'll have to reload the cache, a day in the trading room. So if you want to see what a day in the trading room tends to look like, you can come in here and check it out and see how it plays out. Great testimonials for our trading room, for the book, for our training. Again, you can come down here. You can grab the book for 69 bucks. You can join the trading room for 99 bucks a month, cancel at any time, or you can even pay a yearly and get down to $82.50 a month. I mean, it's very difficult to find that anywhere in trading. Most folks want you to trade, want you to pay multiple hundreds of dollars, if not $300+. This is just a fantastic value for what we do. A great room filled with great traders that really care about the market, about each other, and really look to help each other and get better. And that's what we look for. So a lot of great content here for everybody, whatever your level, whatever your experience. We got a lot of great stuff here. But again, I want to say thank you all very much for hanging out today for our July monthly market outlook. And I look forward to seeing you all soon. Have a fantastic rest of your day, and I'll see you later. Take care, folks.